Welcome to etvFutures.com. It's Wednesday, December 19th. I'm Remy Hoki for Commodities Open Report. NYMEX crude futures are trading higher following the latest EIA petroleum supply data. Inventories fell by 7.6 million barrels in the week ended December 14th. After the data release, February crude futures rallied $1.50 to $91.13 a barrel. The EIA also reported that gasoline supplies rose by 3 million barrels in the latest week, while distillate stocks fell by 2.1 million barrels. Following the data, January RBOB gas gained 3.47 cents to $2.33.90 a gallon. Meanwhile, January heating oil rose 4.67 cents to $2.6021 a gallon. And in the metals complex, gold futures are trading higher on the session. COMEX gold was last trading up $1.40 at $809.10 an ounce. Today, the U.S. dollar is trading little changed versus the major, with the exception of sterling. Following the latest BOE minutes, which showed a unanimous vote to cut rates at the latest meeting, the British currency is trading weaker against the current U.S. currency. This morning, we're joined by Mike Fitzpatrick from MAG Global. He weighs in on the latest EIA data.
All right, good morning, Remy. The inventory reports came in somewhat as expected with a drawdown in crude, but unexpectedly large. Initially, prices moved up much higher because we are facing a year-on-year deficit of pretty close to 10% in crude oil. However, prices gave back pretty quickly when it was realized that most of the deficit this week was because of the problems in delivery of imports at the Houston Ship Channel last week. Usually those sorts of things are made up very, very quickly. Secondly, the market seems to have between the two poles, one that keys on tight supplies in the face of winter, and a second is that shrinking energy demand growth as a result of a challenging economic climate. Central bank activity the last couple of weeks, which is intent on pumping liquidity into the markets, which is quite necessary right now, even though there actually is no credit crunch just yet, seems to have had the opposite effect in most energy market participants' minds, and just heightened their concerns about the economy going forward. However, we don't really see any recession yet. We do see a bit of a slowdown going into next year, and that's why we still hold that towards the end of the year and into the first quarter, prices will probably go to $100 and higher. But after that, they should start to leak, and we'll look for a yearly average next year of about $85.
That was Mike Fitzpatrick from MAG Global with his commodities commentary. I'm Remy Hoki. Join us after the NYMEX session for a commodities recap right here on etvFutures.com.